Okay, let's unpack this. I mean, imagine you are on a ship, right? Your sails are perfectly catching a strong tailwind.
Yeah, moving you forward.
Exactly. But there is a massive, unseen ocean current dragging you backward anyway. And honestly, that is exactly what is happening in the crypto markets today.
It is a really fascinating tension, you know. The technical charts are basically trying to push token prices higher, but the rest of the world is, well, forcing them down.
Right. And to figure out who wins this tug of war for you, we are pulling from the Vantage Plus Weekly Outlook. This was published today, Monday, July 13th, 2026.
It's a crucial briefing for this week.
Totally. We really need to understand this ocean current first. The report points straight to the U.S.-Iran escalation, and specifically to Iran closing the Strait of Hormuz.
Yeah, a massive geopolitical event.
But I'm just wondering, how does a closed shipping lane on the other side of the world actually sink a digital token?
Well, if we connect this to the bigger picture, it is basically a chain reaction of liquidity. The
Hmm.
Strait of Hormuz is, a massive choke point for global oil. When that closes, oil prices predictably spike. And when energy costs jump,
Inflation fears flare up again.
exactly, which means the U.S. Federal Reserve is expected to keep interest rates high to fight that inflation. And high rates make the U.S. dollar incredibly strong.
Ah, okay.
Yeah, and a strong dollar acts like a giant vacuum. It just sucks the risk appetite and the cash right out of markets like stocks and crypto.
Wow. So that macro current is pulling hard. But looking at Bitcoin, it's trading around $63,775.
Yeah, trying to survive the suction.
Right. It needs to hold a $60,000 floor, but the report says it really has to punch through 66,000 to get back to a bullish run toward 80,000.
That 66,000 mark is the key.
But I'm looking at this $66,000 ceiling, and I just don't get it. Back in February, Bitcoin was sitting comfortably at that level. It was a safety net, right?
Yeah, it was the floor.
So if it's familiar territory, why is it suddenly so incredibly hard to rip through and get back up there?
Oh, it all comes down to the psychology of trapped buyers.
Trapped buyers.
Yeah. Think about everyone who bought Bitcoin at 66,000 back in February, thinking it was going higher. When that floor broke, they were suddenly sitting on massive losses.
Ouch. Yeah, I can see that.
So now, as the price slowly climbs back up to that exact level, human nature kicks in. They sell just to break even and, get out without a loss.
Oh, wow. So all that relief selling basically creates a massive wall of resistance. It needs a ton of fresh buying power to blast through those break-even sellers.
That is the exact mechanism. Now, Ethereum is a really interesting contrast here. It's hovering around 1795, and it's actually breaking its technical support to the upside.
Oh, nice.
Yeah, if it can target and grab a firm hold of 1800, it regains serious momentum. The chart structure is pointing to an eventual target of 2400.
So it's finding isolated structural support despite the broader headwinds.
Yeah,
Okay, so if the strong dollar is acting like a vacuum for liquidity, it makes sense that heavyweights like Bitcoin and Ethereum might survive. But what about altcoins?
Oh, they are on the edge.
Yeah, I'm looking at XRP and Solana, and it seems rough. XRP is trading at 1.0894, and it needs to break 1.101 to target February's resistance.
But if it falls below 1.08,
The sellers take charge, right? The report says it risks a drop to parity, just straight down to $1.
yeah. And what's fascinating here is how directly these altcoin charts are at the mercy of the dollar's strength. Fading risk sentiment always hits smaller caps first.
Because investors panic and seek safety in cash or Bitcoin.
Exactly.
Yeah.
Which brings us to Solana. It is trading at $76.29. Sellers took control last Wednesday, and defending the $75 level is absolutely critical.
So what does this all mean? Defending $75 feels like walking a tightrope in heavy winds, or like a dam holding back water.
That's a great way to put it.
Yeah, every time the price hits it and bounces off, the structural integrity of the dam weakens. And if it cracks, fresh selling pressure floods the market.
Right, and ADA is in a very similar boat. These dams are built, but whether they hold depends entirely on that macro current.
It really is delicately trapped between promising technical chart setups and severe global macroeconomic pressures.
Yep, no market exists in a vacuum.
Which leaves you with a pretty heavy question to mull over. We always hear about crypto being this independent, decentralized safe haven.
Right.
But if traditional macro events like oil shipping routes closing in the Middle East can so heavily dictate your token prices, how decentralized and independent from traditional fiat finance is the crypto ecosystem, really?
So we'll think about.